Hello, everyone, and welcome to ETR's January 2025 Macro Views Survey. Thank you for joining us. Today, we'll be diving into the key findings and insights gathered from more than 1,800 IT experts from the ETR community. ETR's macro survey consistently tracks and updates core macro trends like budget growth, spending priorities, seat licensing growth, IT headcount changes, pricing increases, and spending trackers across four core areas of tech spending, as well as cloud repatriation trends. We can quickly iterate the macro survey topics based on shifting priorities, technology trends, and most importantly, client feedback. So please keep the communication coming. We always love to hear your ideas. With that out of the way, allow me to introduce myself. My name is Eric Bradley, and I am joined today by my ETR research colleagues, Jake Fabrizio and Doug Brule, who will be joining me in the analysis on this call. Okay, let's kick this off. The January 2025 Macro Views survey was conducted from December 3rd, 2024 to January 2nd, 2025, and gathered responses from 1,835 IT decision makers. With strong representation from 277 Fortune 500 organizations and more than 21% of the Global 2000. The participant pool was split three-quarters North American and one-quarter international. Of our survey respondents, 26% hold C-suite titles and 51% are at the VP or director level. By industry, services consulting, IT telco, and the financials insurance verticals made up 55% of respondents, with 57% from large organizations and 43% from midsize and small organizations. Now let's talk about IT spending. On average, final IT spending growth for 2024 landed at 3.9%, up half a percentage point from the October survey. And spending change is now projected at 5.3% growth for 2025, also up half a point from the prior survey, marking the highest level we have captured since July of 2022. Here we take a closer look at which respondent subsamples in our survey have the most optimistic outlooks for IT spending. IT spend growth continues to be highest among small and mid-size organizations. Albeit off of a lower base, Fortune 500 and Global 2000 organizations showed stronger improvements versus 3 months ago, at 0.9 and 0.7 percentage points respectively. Financials insurance organizations lead with 6.2 projected growth for 2025 and 1.5 points increase from the previous survey. Interestingly, a notable divergence is seen when parsing the spending estimates by job title, where C-suite respondents project 6.1% year-over-year growth, which is slightly lower than their initial projections of 6.4%, but notably higher than the total respondent average and their VP director and practitioner counterparts at 4.8%. Looking at spending patterns, 73% of respondents plan to increase IT spend by 1% or more in 2025, with only 15% indicating decreases. Following a big move higher from the prior survey, project acceleration remains the primary driver for increased spending, followed by cloud resource expansion, which actually caught a slight decel. Notably, only 6% cite new vendor adoption as a driver, compared to 12% focusing on new capabilities from their existing vendors, adding some momentum to the platformization versus vendor sprawl debate. And here we see that among that 15% minority of respondents planning to decrease their annual spend, staffing cost reductions were cited much less frequently than in previous surveys, but still retain the top spot as a way to cut spending. After that, delaying projects and reducing hardware spending emerged as the next two highest alternative approaches. Of note, reducing excess cloud resources, and optimizing SaaS licensing, both saw materially fewer citations than in prior periods. And with that, I'm going to hand it off to Jake to continue the data analysis.
Thanks, Eric. To start here, we're seeing some positive momentum in IT department headcount growth. The average expected change over the next 6 months is plus 2.2%, which marks a significant zero point 0.7 percentage point increase from the October polling window. Notably, when filtering for Global 2000 accounts, the trend has shifted from a decline of 0.2% to a positive increase of 0.5%. Additionally, C-suite respondents are projecting even stronger headcount growth, coming in at 3.4%. Overall, this suggests a more optimistic outlook on IT staffing heading into 2025. Next, let's take a look at outsourced services pricing. Respondents indicated an average price increase of plus 3% over the past 6 months compared to 7 to 12 months ago. This figure remains stable when compared to both the July and October 2024 polling data. Additionally, 53% of respondents reported vendor price increases, with 20% citing a rise of 6% or more. Meanwhile, 22% of respondents noted that pricing has remained flat and 8% observed pricing decreases. Now, when it comes to outsourced services spending, the projected year-over-year growth rate for 2025 stands at plus 2.4%, slightly below the plus 2.8% projection from October. Importantly, 36% of respondents anticipate increasing their outsourced services spending by at least 1%, compared to 21% who expect a decrease. Furthermore, 16% of respondents plan to increase that spending by 10% or more, indicating that while overall growth is slightly tempered, there are still pockets of robust investment in this category. Next, turning our attention to hardware pricing, the data shows an average increase of 3.2% over the past 6 months. This represents a modest acceleration from the 2.6% increase reported in the October 2024 polling period. Over half of the respondents, 57% to be exact, indicated that vendors have raised hardware prices, with 22% of these respondents noting a rise of 6% or greater. Meanwhile, 18% of respondents reported flat pricing and 11% saw price reductions. Finally, I'll take a look at hardware spending expectations. The spend-weighted mean growth rate for 2025 is projected to be 3.0%, which is a notable 1 percentage point increase over the October 2024 estimate for hardware spending growth. 44% of respondents expect to increase their hardware spend by at least 1%, while 20% anticipate a reduction of 1% or more. Notably, 19% of respondents have indicated plans to increase their hardware spending by 10% or more this year. With that, I'll hand it over to my analyst colleague Doug to continue the discussion.
Thank you, Jake. Turning to cloud pricing, on average, respondents indicated that this has increased 2.9% in the past 6 months as compared to 7 to 12 months ago, which is a continued increase versus the July and October 2024 data. 56% of these respondents indicated that vendors have raised pricing, with 18% citing a magnitude of 6% or greater. Meanwhile, 23% of respondents indicated pricing has remained flat, with another 8% indicating vendors have lowered prices. Expectations for overall cloud spending are anticipated to accelerate to 9.5% growth in 2025 versus 2024, a 0.7 percentage point increase from the October estimates. In this category, spend projections far outpace pricing, as 63% anticipate increasing cloud spend by 1% or more, versus 8% anticipating a decrease in cloud spend by 1% or worse. Additionally, a full third anticipate increasing cloud spend by 10% or more. Repatriation of public cloud workloads to on-premise or private cloud infrastructure is a narrative we've heard, but is not anticipated to be widespread over the next 12 months, with only 15% of organizations intending to do so. However, there is an interesting disparity in cloud repatriation between Global 2000 and small and mid-sized organizations, with the former showing 20% intending and the latter showing only 11% planning to move workloads out of the public cloud infrastructure. Diving into the reasons for repatriation for those who intend to, some organizations are moving to on-premise environments due to rising prices, as applications with heavy security requirements, internal tools, and databases can become cost prohibitive to operate in the cloud. Business intelligence and data analytics platforms face similar challenges, compounded by high egress and networking fees. Repatriations are also tied to security, regulatory, and sovereignty concerns. Sensitive data, including customer and employee information, is often preferred to be hosted on-prem to ensure compliance with regulations like GDPR and US standards. Additionally, some enterprises are bringing back data-intensive and latency-sensitive workloads, including SQL and analytics applications, due to these issues. Legacy and compliance-driven workloads may also benefit from on-premise infrastructure. Further use cases for repatriation include compute-intensive and predictable workloads, such as mission-critical applications and high-performance computing, due to stable resource requirements and unpredictable cloud costs. Storage and backup systems, including disaster recovery, analytics, and media storage, were also cited by IT decision makers, as were development, testing, and non-production environments. Finally, legacy and customer-facing applications, some of which were initially shifted to the cloud during hardware shortages, were mentioned by respondents as a repatriation use case to achieve better performance, cost-effectiveness, and integration with regulatory standards. I'll now hand it back to Eric to discuss software pricing.
Excellent analysis, Doug. Thank you. And now moving on to the software and SaaS section. Here we see that, on average, respondents indicated software pricing, both on-prem and SaaS, has increased 3.8% in the past 6 months alone, as compared to 7 to 12 months ago. 66% of respondents indicated that vendors have raised pricing, with 24% citing a magnitude of 6% or greater. Meanwhile, 17% of respondents indicated pricing has remained flat, with another 7% indicating vendors have actually lowered prices. And next up is expected spending growth, where overall software spend, again for both on-prem and SaaS, is anticipated to grow 4.5% in 2025 as compared to 2024, which represents a 1.1 percentage point increase from the October estimates. On the outlier side, 24% of respondents anticipate increasing their software spend by 10% or more. Moving on from pricing and spending, now we review the expectations for seat-based growth, where our survey respondents state that, on average, overall software seat count is projected to grow 3% over the next 6 months, up from 2.3% in the October survey. 35% of respondents anticipate a 5% or greater increase versus 10% indicating a 5% or worse decrease. Lastly, while Global 2000 firms remain more conservative than the average at just 1.7% growth, that still represents a healthy 1 percentage point jump from the prior estimate. As we have been doing for the past few years based on client demand, the ETR analytics team created a sliding scale to see how individual vendors within their respective sectors would be impacted by shifting IT budgets. This chart displays vendors who see ascending net scores among respondents with negative, flat, and positive calendar year 2025 versus calendar year 2024 IT spend change. So beginning with the cloud computing sector, both AWS and Microsoft Azure are seeing material divergence in spending intentions between positive versus negative IT spenders for 2025. Microsoft's spread is sixth largest of this analysis. Microsoft is also notably seeing a large spread in net score between positive and negative IT spenders across various sectors. The largest differences coming from the ECM, infrastructure, cloud computing, productivity apps, and information security sectors. Pervasion leaders Salesforce and ServiceNow both see material alignment to spend patterns within the enterprise apps sector. Looking at the information security sector, Cisco and CrowdStrike show up notably, whereas Okta has much less volatility. Continuing this study, Apple laptops' 61 percentage point spread between positive and negative IT spenders is the largest across this analysis, followed by VMware's 38-point spread in infrastructure software. In addition, many productivity apps net scores are correlated with spending pattern changes as well, with 8 products in that sector qualifying for this analysis, with Atlassian, Google Workspace, and Slack showing the widest disparities there. And lastly, one area that sees the least divergence is Microsoft within the ML AI sector. And now, one last time, I kick the mic back to our colleague Jake Fabrizio to bring us on home.
And that concludes this quarter's MacroViews Survey Findings webinar. As a reminder, each survey we conduct is accompanied by a comprehensive data findings report, and the entire survey and data visualization dashboards are currently available on the ETR platform. But that's not all. Before you go, in case you missed it in December, ETR is very proud to announce the launch of its inaugural AI Product Series survey. The series will consist of 3 semi-annual surveys that will provide critical insights directly from end users, leveraging ETR's standardized methodology. As the series is conducted over time, we will build a historical and comparative dataset capable of revealing market shifts and trend analysis for ongoing insights. As one of the first product-focused standardized surveys available on the market, ETR's AI Product Series offers a comprehensive, data-driven view of AI adoption, spending, and ROI, enabling you to stay ahead of the curve and understand which use cases and products are driving real value. Of course, this new AI series is in addition to our growing body of qualitative research with ETR Insights, our searchable transcript library, our product-focused ETR Observatory reports and surveys, our technology spending intention survey, and much, much more. As always, you can reach out to us at service@etr.ai for further information or to get started on your own custom surveys and research projects. Until next time, everyone, take care.